Ladies and gentlemen, good day and welcome to the 3B Blackbio DX Limited Q1 FY26 conference call hosted by Nuvama Wealth. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touch-tone phone. I now hand the conference over to Mr. Ranveer Singh from Nuvama Wealth. Thank you, and over to you, sir.
Yeah, thank you, moderator. So on behalf of 3B Blackbio DX Limited, I extend a very warm welcome to all participants on the Q1 FY26 financial results discussion call. Today on our call, we have Mr. Dhirendra Dubey, Chairman and Managing Director, and Mr. Nikhil Dubey, Whole-Time Director. Before beginning with this call, I would like to give a short disclaimer. This call may contain some of the forward-looking statements which are completely based on the management's belief, opinion, and expectations as of today. These statements are not a guarantee of company's future performance and involve unforeseen risks and uncertainties. With this, I would have to hand over call to Mr. Dhirendra Dubey for his opening remarks. Over to you, sir. Dhirendra, sir.
Yeah. Good evening to all. Welcome to this con call. This is our first earnings con call after a lot of requests from the investors. So I think you already have gone through the PPT, which has been uploaded along with the results. So I would straight away go to the MDX financial highlights, so where you will see, because that is the main interest of all the shareholders, that in Q1 our sales has been 19 crore 96 lakhs, which is almost 18% higher compared to 16.94 for the Q1 last year. And the EBITDA has been 16.19 crore, which is again higher by 11% on the face of it. But if we exclude the 80 lakhs of expenses, which is one time, which was done for the M&A, then it would again go to 17% compared to the 14.58. And now I would like to take you to the slide 16. So the total addressable market for the Indian molecular diagnostic is estimated to be 350 to 450 crores as per the slide 16. We hold 12 to 15% market share, positioning us as the market leaders. Our brand is very well recognized, and the quality, service, and other things which we provide to our customers is the main reason why we are able to be leader or hold a high percentage of the market share. The MDX industry is projected to grow at 8 to 10% CAGR over the next few years in India due to increasing adoption across diagnostic labs and hospitals and government projects. While this growth is attracting increasing competition, we are hoping to grow at 15 to 20% for FY25-26, backed by our extensive product portfolio and strong market presence over the years, and high quality products well accepted by the customers. The launch of unique panels will expand our market reach, capture high growth segments, and drive sustained growth. Increasing aging population in India, lifestyle changes, evidence-based treatment, and better access to healthcare will play a major role in our growth. Now, for so many years, we were searching for the M&A targets, and finally we were able to find and negotiate down one target, which took a long time. So that is mentioned on slide 30. So, which is already the thing. So, your company 3B, along with its UK subsidiary TP, is pleased to announce that it has entered into a definitive agreement with Avasta Group PLC London to acquire all the shares of Chorus Holding SRL, the parent company of Chorus Bioconcept, which is a 30-year-old manufacturer of rapid diagnostic solutions, for an upfront cash consideration of 2.15 million GBP including net cash and customary working capital adjustment, with an earn-out base for future business performance of up to 0.615 million payable, totaling to 2.765 million. And the financial of Chorus, according to the latest, 5.22 million euro was their top line, and they had a gross margin of 58.7%. However, they were slight EBITDA negative for 0.215 million. They have an assets of 4.14 million. So with efforts to launch new products, enter new territories, and introduce better cost management, we expect to be EBITDA positive in 26-27, as these efforts will take some time to materialize. So I think as we have got a lot of shareholders, I would stop here, and we can take questions from. Thank you.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use their handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question comes from the line of Ganesh from Dhanlakshmi Investment Services. Please go ahead.
Hello, sir. Thank you for giving this opportunity, sir. Sir, just wanted to know about this industry. Almost all the companies in this domain earn very healthy gross margins, but some companies perform well, some don't. So what are the key levers to, create a successful company? Also, an allied question is, why don't companies reduce their margins to, cut each other on cost basis? Thank you.
Also, your question is very generic about the industry, you are saying.
Yeah. Yes, sir.
So basically, for a molecular diagnostic industry, I don't think there are too many listed players. But if you're talking about general.
Yeah, I'm talking about the global perspective, sir.
Okay.
Globally, we can
so
see
what
many
happens
players.
is, it is the cost of goods, which is low. It could be 20% approximately, which is our case, and it can go up to 35-40% in other cases. But then in India, we have the cost of manpower, which is on the lower side. We have the other expenses, which is on the lower side. So that gives us the benefit of a higher EBITDA. But when you talk about companies in US, Europe, it will all vary because there are certain companies which are too big. So they do a very high volume sales and the manpower cost is very minuscule. And some companies do sales, but it is not so high and the manpower cost is much high. So it is basically, it's a technology driven product. So the cost of goods is low, which is the main reason. And how well you can control your manpower cost and the other costs, that decides whether you are going to be finally remaining high EBITDA positive or not.
Got it, sir. Sir, my next question would be, what is the typical process to convert a prospective customer? Say if we are targeting a diagnostic chain, do we approach the head of the chain or is it a more granular approach?
No. Basically, first is, if we are approaching, then definitely we have to approach the person who is the scientific head in the lab. And he would then, after seeing our product presentation, product technical qualifications, he would say, okay, now you perform a demo. And then we have to perform a demo in his lab and he would compare it. Or if it is a new assay, he would see whether it is getting the right result desired and the workflow is reasonable acceptable to the lab technicians or not. Once that is done successfully, then would come the purchase negotiations for the pricing, and then it will be onboarded. And this could take typically, depends, it could take 3 months, it could take 6 months, depending on how soon the lab actually wants the assay.
Okay, got it, sir. Sir, my next question would be, sir, sir, in general, what are the things that we manufacture and what are the things that we import or source as a raw material? And what is the allied question would be, what is the unique value add that we do to the raw materials? What is that we do that others can't generally do? So that would be my question, sir. Thank you.
No, basically, if you take molecular diagnostics, we are dealing with certain typical genetic amplifying materials. We are dealing with enzymes which are master mixes. So they are optimized when the R&D is done. That is the most crucial area. So once the product is properly developed, it takes a lot of time. It takes 1 year, 1.5 years to optimize these genetic amplification targets and optimizing the master mixes and optimizing with lot of samples and other things. And once that is done, then you can start going for the regulatory status approval, and then you can launch an assay.
Okay, sir. Thank you so much. I'll join back in the queue, sir. Thank you so much.
Thank you. Our next question comes from Suruchi Parmar with NX Wealth Management. Please go ahead.
Yeah, hi. Thank you for the opportunity. I want to understand this, the acquisition we did for Chorus, where we are saying this approximately a 60 odd crore top line of company, and it actually generates a gross margin of 58.7%. However, the EBITDA is negative. So first, to understand, is it a structural high expenditure which leads to negative EBITDA, and what is our expectation to take this financial way forward for, let's say, 1 year forward? What efficiency we will bring to make it a EBITDA positive, and what type of levers you are projecting? What is your guidance or projections basis this losses will be curtailed and cut down, and this will start generating a positive EBITDA or something? Thank you.
Yeah. So basically, Chorus is selling multiple products. Primarily, it is AMR, which is growing, but then they have other products which are it is static. So it is the manpower cost which is very high, which is the main reason for this slight loss which they are posting. And basically what we are trying to do is we are trying to expand the geographical reach so that, this product can be started in US, where we have to take FDA approval, which is going to take time. Based on US approval, we can go to Canada, we can go to Latin American countries. Currently, they are pitching in the Asia Pacific countries. In India, also we have the technical collaboration, and we are selling the product under our brand. So if we get all these things right, then basically it will not be 25, 26. It will be 26, 27 when the sales will start increasing. And the manpower, because we have just done the acquisition, we will first see, whether anything leads to downsizing, but that is not the agenda at all. Because we feel that all the people in the company are contributing. It is just that the top line has to increase, which will automatically take care of the manpower cost. They have a very good R&D team of almost 10, 12 people. So there are a lot of products in pipeline which have to be launched. So which will be launched in next 6 to 12 months. They will start adding to the top line. Then we are trying to sell our PCR kit through their network. So, there are overlapping. They have rapid distributors who can sell PCR kits, and maybe we can sell their rapid tests. So there will be cross sales, which will again increase their top line. So it is the top line which is focused to be increased, which will automatically reduce their manpower percentage, and it will become EBITDA positive. And we expect to do this in 26, 27. So it will take at least 12 months to restructure things, to add to the market and other things. But it is
Okay.
a strategic find because it is into the IVD space. The distributors and the hospitals and labs are actually doing infectious testing. So exactly the customer end profile remains the same, and it is into the IVD space. And they have a good facility in Belgium, which we can also leverage for making PCR kits, because we have the content, we have the know-how, so we can sell products either in our brand or it can be rebranded into the Chorus name.
Okay, got it. Sir, what was the objective to acquire this Chorus? Is it its product, or is it its facilities, or some client base, or some approvals? Because the products are not like that which you cannot make it, or is it
No,
something a different understanding?
no. The AMR product which they have, only 2 to 3 companies have it globally. We cannot make it because the antibodies are quite controlled. And these 3 companies, even if we try to source them, we'll get it at a price, which doesn't leave any margin for us. So this product of AMR, which they have got R&D pipeline products. We can do US FDA of their product. It's a European headquartered company, so it has a different brand image based in Belgium. It has a lot of customers. It has almost 60 customers across Europe, Latin America. So, and it's a 30-year-old company. So it's only that the manpower cost is high, so it is currently into this thing. Otherwise, once the top line increases, it will do good.
Okay, so what type of margin we can assume, let's say after a year,
So I think that in three, not after 1 year, I can't say much. I think it will take some time, but I think in next 3 to 4 years, once it starts doing 7 to 8 million euros, then we can think about 10 to 15% of EBITDA margin.
Okay. So 7 to 8 million euros will also take, let's say 5.2 million euros they are still doing at December 24. So
Yeah.
the 7 to 8 type of growth also will take it around, let's say 2 years time. Matlab by
I think
FY27 also.
2 to 3 years it will take.
Okay. So by 2 to 3 years, this will able to achieve a 7 to 8 million
Top line.
euros top
Yeah.
line, and we expect that we will be able to, let's say, do some EBITDA of 15-20% type, something. Can we assume that
No,
number?
10 to 15, 10 to 15, because
10
the
to
manpower
15%.
cost in Europe is very high. And
Okay.
those people are well educated, but the government has got very high pay scale, so we can't do anything. But then that is the doorway to enter Europe, So selling in Spain, France, Germany, they are just neighboring country to Belgium. So, and even in US FDA, a Belgium company which has got lot of R&D strength, it would be easier to do it. And from EBITDA negative to make it 10 to 15% EBITDA positive also is a challenge, which hopefully we will do it.
So any employee closure or some settlement or
No,
payment, anything we have to do it?
no. Nothing is
No. Okay.
planned.
Just one last. Okay. Last question on Indian business side. In FY25, we did around 96 odd crore. Let me ask specifically, let's say, 84 crore from the diagnostic kits business. Current quarter, we did around 20 odd crore. So what should be the growth roadmap for this Indian business? Matlab, means
We have already said that we will grow this year by 15 to 20%.
okay.
So,
Okay.
so you can add, it could be 15, it could be 20, because, we have got a lot of seasonal spikes like flu or dengue, chikungunya. So, either way, it should be minimum 15. It could be higher on the 20 side. So you can add on 84, you add 15 to 20%, you will get a number.
Okay, sir. Thank you. Thank you so much. Thank you for the opportunity.
Thank you. Our next question comes from Kumar Saurabh with Scientific Investing. Please go ahead.
So my question is on the industry. Molecular diagnostic as a percentage of industry size of whole diagnostic, what is the share? And do you see the Indian market is proportionally as how the world market is, or our molecular diagnostic share of total diagnostic is much lower or higher than world average, and what are the reasons around it?
No, so molecular diagnostics in India is very low of the entire diagnostic industry because it's a very niche field, you know. The major diagnostic industry is dominated by a biochemistry testing, which we do on a daily basis. And globally, because it is highly evidence-based, it has a higher percentage, molecular. But still, the other things are much higher. So you have the immunology testing, you have the biochemistry testing. Molecular is a niche area. As a percentage, it is very difficult to say because it's very low. If you say, for example, if you say the entire diagnostic industry is, because I don't have that exact number with me, so it is wrong for me to quantify it, but it's a very niche area. That's the reason why it can grow faster. Abroad, UK, America, it is highly developed, so the growth, of course, in the entire pie, it is still on a lower side. But abroad, it has already evolved to the full extent.
Got it, sir. Second, sir, on the acquisition side, I heard all the answers you gave for, previous questions. But my question is the intent of acquisition, is it to become a global player, a prominent player in Europe? Have we done the acquisition with that kind of mindset, or we acquired a company because we got it at a good price and hence we thought it's a good idea to go there and first turn it around, make it profitable, and then see what can be done with this?
No, actually, Europe and US, these are the area where companies command some value because there is a R&D background, the product quality is well accepted. So we have been only looking at acquisitions in Europe and US. And we acquired our distributor who is in UK, which helped us actually to acquire this company because being present in UK gives some credibility. So now with this company, we will be having a base in Belgium, which is the European Union, which is actually after Brexit, UK has separated. So we have one base in UK, we have one base in Belgium. And if we are able to do a few more acquisitions in US or in some other European company, so then it will become a very, very good sort of, group, having companies across Europe, America, UK, India being the base. So it will add value to the entire group. And that is the intent. So we don't acquire just for the sake of acquisition. We acquire if there is any basis. Like AMR is supposed to grow for next few years. And Chorus has got very good AMR products. If you see their website or even we have shared in our presentation, the antimicrobial resistance, if you go to an ICU patient and then you see how critical he is. So AMR is the future of the industry and Chorus is very deeply, very solid in that. And then they have got other products in pipeline which are primarily on AMR. So that was the reason because Chorus acquisition, we did acquire at a good price because of reasons, that Avacta wanted to sell it because they wanted to be focusing on therapeutics, which is their main area. And we have been associated with Chorus for a long time. That's how we got Chorus.
Got it, sir. Got it. And sir, we do spend a good amount of revenue on R&D. So can you elaborate a little bit about what kind of R&D work we do and how does it help? We have seen the products and the products we have built and how we have penetrated hospitals where number of products per hospital has been on increase. But if you can give some more flavor on the quality of the R&D work we do, and does it act as a differentiator when it comes to competition and all?
So you see, we are having a range of over 100 products. And in our presentations, we talk about panels, So these are multi-tube assays, like the respiratory panel is 8 tubes and we are able to detect 32 organisms, bacteria plus virus. So these are some unique products. We have the meningitis panel, we have the neuro panel. These are not single tube assays. It takes almost 2 years to develop them. So, and because we have been doing this for last 10, 11 years, it is become our core competency that we can develop multi-tube assays. Of course, it takes time. So we know the entire workflow from conceptualization to validation, verification, and how to take it for regulatory approval. And we have a very good team. We have PhDs, we have MSCs who are now almost for 10 years, 8 years. So this is the core backbone of our company. It is not doing the production, which is our main. Then comes the quality part. So that we are maintaining it well. But R&D is the main strength of the company. We can develop assays fast. Like monkeypox came, there was a demand. We did it in 30 days. COVID came. If we were not competent in R&D terms, we developed in almost 30 days, and we were the second company to be approved by ICMR, and we were exporting to US. We were FDA approved. So all this is based on the R&D strength of our company.
Got it. Thanks a lot, sir, and wish you all the best.
Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 1 or 2 per participant. Should you have a follow-up question, we would request you to rejoin the queue. Our next question comes from Sagar Tana with Alchemy Ventures. Please go ahead.
Hi, sir. Can you give us the top 3 segments in terms of our product portfolio, and what is the growth that you are seeing in those segments?
No, when you say segment, what do you mean? Because we have...
Like respiratory, AMR, oncology, I mean, from that therapeutic.
No, so we have got basically 2 segments, infectious and oncology. So oncology was what we started very early. But infectious has now taken a bigger pie. And in fact, combined, we are growing at 15 to 20%, what we say. We can't differentiate because we keep on adding products. And the moment you add a new product, it has a high growth initially because it has a low base. So combined, we are targeting growth rate of 15 to 20%. If you launch a new product, it grows by 100%.
Got it. And what are the newer segments that we are looking to get into?
No, we are trying to add assays in the newer technology so that we remain technologically relevant, PCR is our main strength. We have the rapid diagnostic now. With Cores being acquired, now we will be more active on the rapid front, which is very fast and it is like a POC. Apart from this, we are developing assays on NGS so that we remain technically viable. We are developing assays on digital PCR so that again we remain technically viable. We are continuously doing R&D on the PCR field, both in oncology and infection.
Got it.
So,
sir, my second question is on what would be the split between labs and hospitals in terms of percentage revenue?
I think labs is on a higher side. It's almost 65%. Hospitals is lower side, 30 to 35%.
Got it. Thank you.
Thank you. Our next question comes from Parikshit Kabra with PKD. Please go ahead.
Hi. Thank you for the opportunity. I wanted to inquire about the sport business as well as the Manchester business. That has been growing very well.
Sorry to interrupt you, sir. Mr. Parikshit, I'm extremely sorry to interrupt you, sir. So your audio is fluctuating. May I request that you use your handset, please?
Yeah. Is this better?
Yes, sir. Thank you. Please go ahead.
Just
Again, your voice is
Mr. Parikshit, we are unable to hear you, sir.
Hello?
Yes, sir. Please go ahead,
Yes.
sir.
Yeah, sorry. So I was saying that we have done very well in our both our export as well as our Manchester business. And I was trying to understand what is it that our go-to-market strategy there as well as our right to win there. How are we winning market share in these markets? Which markets are we targeting through these businesses?
No, so we started the UK subsidiary with the focus to cater to the European customers. Firstly, UK customers, and then the countries which are adjoining. It could be Spain, France, Italy, Greece. And based on our early wins and then exhibiting in the trade fairs and using the marketing team to pitch the products, now we are getting traction in Latin America and other European territories. And even sometimes Middle East also, they prefer the made in UK symbol. So that is how we are getting the wins. We are giving technical support right at the same time zone. The scientists are sitting there in UK. So it is not that you have to expect results from India when it is night. So, and then we are troubleshooting, we are giving demos, technical support right there. So, and the confidence of the customer comes that you are sitting in UK. So if there is some issue, it will be resolved. We have backup supplies and inventories lying in UK. So which is the main thing, European customer wants is immediate, same time, tech support, backup supplies, and being in UK, the reliability is there because they have systems which are very well evolved. So they expect, that everybody is following the same system.
Trying to understand that even if we are in the UK, how are we competing with the local players there who were already captured the market?
No, that we are able to do because we have a better pricing, listing structure. When we approach the customer, so UK-based companies is not the challenge. Some essays are actually coming from America, United States are coming from France. So it is easier. So like France, if a company is manufacturing, for us it is difficult to compete in France, but not in UK. This is a typical, product which is made mainly in America, US or France. Similarly, Germany, if a German manufacturer is there, then it becomes difficult for us. But if the German manufacturer is not there, then we can easily see. So it's a mix and match. In the countries like France, we are not having to get good headway because there is a local manufacturer there. But in UK, there is no UK manufacturer who is making the onco products. It's coming from US or France. So that is how we are. And plus we give competitive prices. We have margin profiles better than the European or American company because they have high manpower costs, which is not in our case. So we are able to compete, offer a better product. And I would say that our quality is very well appreciated. So that is one more thing, which the moment they perform the test and they see the result, then they agree to it. And when we are giving them better terms in terms of price, service, so we are able to make the entry.
Mr. Parikshit, does that answer your question, sir?
Kind of, I had a follow-up here. Is that okay?
Okay, a short one, maybe, because other people are also waiting.
Sure. Just a short one. So, you said that the main advantage of the cost advantage that you have is because of the manpower cost. But at the same time, in the most recent acquisition, you don't
Mr. Parikshit, we are unable to hear you, sir.
Okay. Will be.
Thank you, sir. May we
Thank
request that you rejoin the queue, sir. Thank you. Our next question comes from Dharmil Shah from Dalmus Capital Management. Please go ahead.
Hi. Thank you for the opportunity. So again, extending the same line of questioning for the Europe business. Like you have mentioned, the size for the industry in India is around 350 to 400 crores. What would be the relevant opportunity for us for the Europe market? I mean, maybe for open-ended free-agent market, any sizing would have.
You see, it's a very difficult question because the global market for molecular diagnostic is very big in terms because there the products are like sample to answer. There are big machine systems. So anything taken out statistically from the internet doesn't correspond to the right number which is our addressable market. So we are into open system kits. And what I can foresee is that exports will keep on growing at 20 to 25% for next 2 to 3 years. So the addressable market could be much higher. But then, when you talk about molecular diagnostic, almost 30 to 40% of MDX is dominated by US, where we are not present because it is highly regulated US FDA market. And infectious market, again, we are not present in Europe. America is out because it is again sample to answer. These are big machines of Roche and other companies where you inject the sample on one end and you get the result because the labs don't have manpower. So we are into open-end niche area for oncology where the addressable market is reasonable enough for us to keep on growing for next 2-3 years. It's difficult to give a number because we have also not been, it's very difficult to find it. That what is the number for the open-ended kit predominantly for oncology where we are strong.
Understood. And for the true PCR business, if we see our quarterly revenues, it's almost stagnant at around 4.5 crores for last 3 to 4 quarters. So is there any specific reason for that?
You're talking about UK?
True PCR, yeah. True PCR
Yeah.
UK.
No, actually, quarter on quarter, if you see last 3 years, the exports, or rather the true PCR. So 4.55 crore was the top line in 22-23. 7.04 crore was 23-24. And last year, 24-25 was 13.91. So from 4.55 in 22-23, we have gone to 13.91. And this year, it should grow at least by 30%. So again, you can talk about touching somewhere around 17 to 18 because this is going to be our major contributor in exports where we are claiming to grow by 20 to 25%. So it is not static. Last year, 13.91, probably 4 quarters, if you are saying every quarter, the number was somewhere around 4. So it's the year on year which is important. So this year, instead of 13.91, we should be somewhere around 17 to 18.
Understood. And for the Coris acquisitions, their revenue seems to be flat for the last 3 years at 5.2 million. So what was the reason for saying? Is it the industry demand going down there or?
No. So the reason is basically first, the COVID went away and Coris was the first company, a European company to get the COVID approval. So they did very well sales in COVID times. But after 22, so they had product, this AMR one, it was launched in 22, 23 only. And that is what has been growing. There were other products, respiratory, gastro, which were coming down. COVID went away. So basically, now the R&D pipeline and the antimicrobial, which is the growing part, that will now take it forward. For the last and last year and this year also, they have the typical product called HAT, which we have mentioned. It is for the sleeping disorder, which they supplied to the Belgium authorities, So the AMR, which is going to be the top product, it started from literally 0 in 22, and now it is almost at 3 million. And that is what is going to take over. The HAT product, which was again 22, it was 0, but it was at 1.72 million, that range. The respiratory and other products, they were going down instead of going up because there was competition from China. So some products which were at 1.5 million, because of competition, they scaled down. The unique products like AMR and HAT, they are increasing. So whatever is the static reason was that some products, respiratory, gastro, flu, because of the extensive competition from China, they reduced. The AMR increased. So now this AMR, which the competition is very less from the Chinese company. There is only one Chinese company. So that is why it would do better now.
Understood. And the senior management there, would they continue run the business or will 3B take over the
No. So basically we will be at the board level of the CEO, the COO, everybody will be there and they will continue. They have mentioned it in their press release also. All their distributors had the similar question. So there will be no change. We will be only at the board level and overseeing the operations.
Understood. And you mentioned that revenues might increase up to 7 to 8 million within 3 years. Does that account for only the cross mis-selling of our products there what is the breakup of that?
No, the AMR would be predominant. The antimicrobial resistance products will be predominant. PCR kits will be somewhere around 10 to 15%. New products in pipeline, they will also add that way.
Understood. That's from my side. Thank you.
Thank you. Our next question comes from Matt Harris with Seven Canyons Advisors LLC. Please go ahead.
Hello, can you hear me?
Yeah, I can hear you.
Okay. A lot of my questions have been answered, but one question I was unclear on. When you were talking about distribution through the UK and how it's more competitive in France because of local manufacturing, can you remind me, where Chorus does the kit manufacturing, and then number two, that lower labor cost advantage you have? I had always assumed it's because you were manufacturing in India, but it sounds like you're sourcing a lot of your kits from the U.S. or Germany or wherever. So, two questions. Where do you get the labor cost advantages? And then what percentage of your kits, the kits you sell, do you manufacture yourself?
Okay. So I think there is some confusion. Firstly, all the kits that are manufactured by 3B are done here locally with the Indian manpower. And most of the raw materials are sourced in India. And we have a lot of bulk purchases, so our cost of raw material is very controlled. And so there is nothing which is coming from US, France. What I mentioned was that the companies who are manufacturing in US and France, they compete in their countries. And some US company was competing in US versus which we were cheaper. That's how we were able to win the UK account. But in France, the local company in France is having almost a 10-year grip. So it's difficult for us to displace that company. So all the kits are manufactured in India with local manpower in India. We do not manufacture or source products from anywhere outside India.
Okay, got it. Okay, and so where does Chorus do all their manufacturing? Where's their manufacturing based?
No, so Chorus does all the manufacturing in Belgium, and that is the reason why their manpower cost is very high. And now with we trying to onboard, so we will try to take up the top line. For last 2-3 years, there was one more reason why Chorus was not growing well. Avacta had acquired it in 23. And Avacta is a therapeutic company because they have some cancer drug delivery molecule. So their focus is on that. So the management chief was sitting in US and UK, and this was not their prime focus, which they always say in their presentations also. So that was one reason why Chorus, did not grow, because the top management was not focused on the growth, could not give a direction to it. Now, because it is very complementary to our industry, IBD, we have a clear-cut intent that we need to be EBITDA positive. For that, we have to grow. We have to launch new products fast. We have to do US regulatory approval fast. So that way, we are giving a direction. The team there was little bit disillusioned because the Avacta was not fully focusing on them. Now we are trying to create that, do away that disillusion, make them feel very confident, healthy, and that's how we will take up the growth.
Okay, but there's no, I think about the offshore aspect, and
Sorry to interrupt you, Matt. Your audio is not clear. Yes, Matt, can you hear us? Yes.
I can hear you. Can you hear me?
Yeah,
yes,
now I can hear you.
Can you hear me okay?
Speak louder, it will be okay.
Okay. There is no strategy to offshore their manufacturing or production. R&D and manufacturing, I think of them as differently, and it seems like taking their production to India would be advantageous, but that is not part of the strategy at all.
Not immediately, but it is there as a strategy to start manufacturing sometime. Yeah, but then since we have just acquired it, we don't want to make that as a focus. First, let this company stabilize, let it focus on the launch of new R&D products, let it get the US FDA approval for the assay. And during this time, we will see what all products can be manufactured in India if they have to be sold here. Because something which is manufactured here cannot be sold in Europe because the logistics cost would be exorbitant. It's better that we manufacture here what can be sold in Middle East, Asia Pacific. And moreover, they have added capacity which is now going towards automation. So they will also be more cost efficient.
Okay. Okay. I have one last question. As you get down from the sales to the EBITDA negative, as you integrate the company, where do we see the bulk of those costs? Given they're an R&D company, is a lot of that in D&A or is some amortization given they have a pipeline, or is it going to show up in your payroll costs and your G&A costs? Where do we see the loss in EBITDA impact your profitability? The consolidated profitability.
In terms of after consolidation?
Yeah.
So once we consolidate, I think it would happen from the half year Q2 onwards. So there will be an increase in the manpower cost mainly, which is the major contribution of expense in Chorus. Almost 58.7 or 60% is their gross margin. So 40% would be their cost of goods, and then you have the manpower cost, which is the major cost. That will increase in our result.
Okay. Well, I have one last question. I mean, I'm surprised. I think you said, hey, at 7 to 8 million euro, it's mostly growth of AMR, and the cross-selling would only be 10 to 15%. That sort of surprises me because with the Manchester business, there's so much benefit from the India production. And so do you have high overlap in existing tests with their distribution? And is that 10 to 15% of your existing tests, is that a conservative number? Because it seems like you could just push a lot more of your production through their added distribution channel, a la the Manchester business.
So actually, we have just started this process of interacting with the distributors. So when we say 10 to 15%, we are talking about up to 1 million or so sales from PCR in next 2 years or 3 years. It's of course a very conservative number because we really don't know how well it will be taken, because the distribution have just responded, yes, they would be interested. Some distributors are already having a PCR company, which is either from US or from Europe. So things will unfold. At this point, it is better to say that in next 2-3 years, they should go a top line of 7 to 8 million. And out of that, 10 to 15% should be PCR, and major contribution should be AMR, and of course followed by products from their R&D pipeline. Maybe after 6 months, we have little more clarity. That time we can update more about what could be the next. For me, I would want that they sell at least 30-40% PCR kits. But initially, I have not got that kind of response because their distributors are selling rapid. Some are empty, so they would immediately take over the PCR kits business. Some are already having PCR companies, so those will take a lot of time. So it's a conservative number for now.
Okay. Well, one last question. I mean, as you talk about expanding your distribution, is your M&A pipeline still mature, or will you sit back and work on synergies and digesting Chorus for the time being, or are you still actively pursuing any more M&A?
No. We are continuing our persuasion. We have told all our advisors, rather this acquisition has given confidence to not only our advisors, but to us also, because we have really gone through a long process for last 1 year, lot of due diligence, negotiations. So we are continuously looking, because this is a very small percentage of our available funds. So the focus to synergize Chorus business is definitely there, but every day we are looking at new acquisition targets globally.
Thank you, sir. Mr. Harris, may we request that you return to the question queue for follow-up questions, as there are several participants waiting for their turn. Thank you, sir. Our next question, before we take our next question, a reminder to all the participants, please limit your questions to 1 or 2 per participant. Should you have a follow-up question, we would request you to rejoin the queue. Our next question comes from Vineet Jain, who's an investor. Please go ahead.
Hi, Mr. Dubey. Can you hear me?
Yeah, I can hear you.
Wonderful. So first of all, thank you so much for doing this earnings call, and congratulations on the Chorus acquisition. I just have a couple of questions on the core business. I wanted to understand how is it that our asset turns are as high as they are. If you can give a little bit of a sense on the specifics of how this kind of capital efficiency plays in, and for future growth from the base business, how much additional capital will be required to maintain these kind of asset turns and also show growth in the future. That's one. And the second one was around the agrichem business, and if you can give us a little bit of sense of what the plans are there. I remember, I think a couple of years back, there was a discussion on looking to spin off the agrichem business and then use the funds to double down on the molecular diagnostics piece. So if there's any development of that, we'd love to know.
No, so first question is the capital thing. So molecular diagnostic is not a capital intensive industry. So you have clean rooms, you have equipment which are needed. So we are having full capacity which we are only utilizing up to 65%. So we will only be adding capacity or maybe adding some equipment what needed for R&D. So as such, for next 2 years, we don't see adding too many capital things. At the most, if we upgrade a facility, it would need maybe 1 crore or 2 crores. So capitally, we are sufficient for next 2-3 years. Sometime we might buy a very heavy cost equipment, which also is not more than 1 crore, which we are restricting right now because the NGS technology, which has a heavy machine, is we are doing it in a different way rather than to buy a machine for 7 crores or this thing. So capital-wise, we are sufficient, and this is not an industry which is high capital intensive. So this is the first part. The second part is agrochem. So agrochem now we don't do major sales to the distributors, who were doing it for the farmers. Now we have tried to reduce it mainly to Bangladesh exports, which is on LC or upfront payments. Then we are doing government tenders again, which are payments are time bound. And then we have very old distributors through whom which were payments have to be realized. So we keep on selling to them. And the business is actually not losing money. It's not earning too much also. It's just like 10 to 12 lakhs or something. We are always open to hiving it off because we have a brand image which is 50 years old. But with a top line of just 12 crore, I don't think there would be anyone immediately interested. And the facility which we are utilizing for diagnostic primarily is of agrochemical business, So the building and everything. And then a lot of people who are old labor and all, they are used for packaging diagnostic kits also. So it's a business which is going static. We are gradually not trying to increase the sales also, So the margin profile is static. We just ensure that it is just making slight profit. And we look for opportunities maybe because the mosquito menace is going up. So maybe there could be big tenders. Like we got one opportunity 1.5 years back, which was from Sudan. So there was a 2 crore export order for the larvicide. So we are actively there, and such orders either from government, big tenders come. So we would be very well placed to supply these tenders. We are exporting, and we are just making it a low-lying business of 10-12 crore. That's it.
Wonderful. Can I ask a quick follow-up on the first part?
Yeah, please.
So you said that 65% or so is your utilization, and the fact that it's not a capital-intensive business. So would it be fair to assume that the India molecular diagnostic business could grow up to 50-odd% from here without any significant incremental capital being deployed? And if that's the case, then is there a possibility for margins, gross margins as well as EBITDA margins to further expand as that ramp up happens?
No, because firstly, for next 50% growth, we don't need to add anything substantial. It could be maybe 1 crore or so. Number two, the addition in sales will not increase margins in terms, because the margin we are doing is somewhere around EBITDA 60% on a ballpark figure for last 3 years, apart from the other income, excluding the other income. And now maintaining this also could be a challenge. We are having pressure from the competitors. There would be some inflationary increase in terms of wages, some raw materials. So the margin profile will remain quite similar, maybe little towards the 55 region instead of 60-ish region. And because the sales will increase, it does not mean the margins will increase, because there is competition. And I told you that due to the demand for influence, the cost of manpower will increase because the salaries have to be increased. So we would have a EBITDA margin which would be now onwards towards a 55 side rather than the 60 side.
Understood. Thank you. Thank you very much, and wish you all the best. And I hope that we keep having earnings calls going forward as well.
Okay, thank you.
Thank you. Our next question comes from Yogesh Bhatia with Sequent Investments. Please go ahead.
Hello.
Hello.
Sir, I just wanted to understand what is the addressable market for us for the products that we've developed in antimicrobial resistance in the different geographies that we are.
So you are talking about only AMR.
Only AMR, yes.
No, so AMR, firstly, if you talk about India, so currently what is AMR? You see ICU patient, his sample is taken immediately for culture.
Correct.
And then the culture grows. Once it is grown positive, then it is put to the drug sensitivity testing. So that is the AMR market, which is dominated by BD, Biomero, and then there is a subset of this which is the local culture labs, which also do AMR testing. Now that is very cheap ones, you have the 200 rupees or something. So molecular AMR testing, it is just starting in India. It is very costly. So people don't do molecular testing for AMR. There are few international companies which are doing, but that also is very small number. Maybe it could be 10-20 crores or odd. So
but
that
does
is the
molecular. Sorry to interrupt you, but does molecular testing have any solid advantage against this cheap 200 rupees PCR testing?
No. So what happens is, firstly the cheap 200 rupees culture lab testing, it is cheap because they develop their own media. And what molecular testing does is mainly that you can identify the organism along with its drug resistance within 3 to 4 hours from taking the patient sample. And it is a better way because co-infections can be detected, low load samples can be detected because PCR amplification is happening. But with culture, when you get the result is literally after 6 to 12 hours the growth comes, and then after 6 hours the bacterial sensitivity comes. So it is actually 1 to 2 days that you can get a culture report to be positive, whereas with PCR you are getting a result in 4 hours. So that is the main essence, that you are getting fast results, which is better. Globally, in US, UK and all, they are doing molecular testing more. Culture is supposed to be faded out. gradual.
Okay. 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 So in India, it is just scratching the surface, but slowly you think.
Yeah. It's just scratching the surface, and maybe in 5 years becomes very big. But let's see how well the adoption happens, because India is not very price-paying population is there. So, this is not so easy.
Sure. And sir, this market for us outside in the other overseas place where we have our products, what could be the addressable market for us?
For AMR?
Yeah, for AMR.
So for AMR, the other countries, the market is little evolved. There are companies who are already selling the AMR kits.
Mm-hmm.
And infectious is, it's like a POC market. You put the sample onto the machine and you get the result. Where we are not currently there.
Right.
So AMR is a part of the POC. It first identifies the organism and then you take the AMR part. So we are not actually present in terms of AMR testing in the European market. US is highly regulated. You require FDA, so we are not there. We are selling AMR kits currently to some Middle East countries, to some countries in Asia Pacific, South Asia.
Okay. So sir, our major growth will come from the other diagnostic products only. AMR will take some time.
AMR will take time.
Will also
it is there in the menu. It is there in the menu. It is well established technically, but it has not started giving real contribution to the numbers.
Right. Okay. And NGS is also a similar, work in progress. It will take some time.
It will take time. But the question is, that we have to be technically relevant so that suddenly if there is a huge technical shift, we know that we have put in the door,
Sure. Okay, sir. Thank you, sir. That was both my questions.
Thank you. A reminder to all the participants, may we request that you limit your questions to 1 or 2 per person. Should you have a follow-up question, we would request you to rejoin the queue. Our next question comes from Aditya Sharma from Shikara Investment. Please go ahead.
Hi, sir. Thanks for the opportunity. Just want to double down on the exports. So last year also, while you were guiding for around 20%, the company delivered significantly higher export growth. So at some level, do you have some level of expectation that we can significantly surpass this year's guidance as well?
It's better to be conservative, to give a conservative number and deliver more. Because suddenly sometimes you get tender orders, some orders come which are big, so which cannot be projected immediately. So that is why we are currently focusing on a 20 to 25% growth. If by your wish we get a big order, that would be very good.
Sure, sir. And also, just crystal ball gazing in terms of next 5 to 10 years, like let's say around 5 years, what size do you think that the export business could be? Like, what's the aspiration here?
No, I think currently we are around 17 or 18% is our export, and rest is domestic. I think next after 5 years, it should be somewhere around 35 to 40% should be export, and 60% odd should be domestic.
Right. On a 20% CAGR, 20-25% CAGR, 20% CAGR is the
Actually,
broad
when we are talking about CAGR, because we are mixing the Indian, then we are talking about 15 to 20%. And I am giving this CAGR for next year. Next year, again, we can give a revised number. I'm not saying for 5 years we will keep on growing, at 15, 20. It could be higher, it could be lower. Next year, this year it will be 15 to 20%.
Okay. But we don't have a clear visibility in terms of what is the long-term CAGR that the export business can grow for next 5 years. We don't have it in terms of around 2025. Okay.
No. We can think about 1 year, and maybe next year we can review it, because thinking 5 years down the line is very difficult. Of course, 15-20% we should grow for 1 or 2 years. After 2 years, we can definitely see where we are. Maybe we can do much better than 15-20.
Thank you, sir. Mr. Sharma, we request that you return to the question queue for follow-up questions, please. Thank you. Ladies and gentlemen, may we request you to limit to 1 or 2 questions per participant. Should you have a follow-up question, we would request you to rejoin the queue. Thank you. Our next question comes from Pulkit Singhal from Dalmus Capital Management. Please go ahead.
Yeah, hi. Thank you for the opportunity. So just a question on the molecular diagnostics industry growth that you're talking about, 8 to 10% in the Indian market. I'm just wanting to question you on it simply because, you did allude to that it's a very low penetrated category within India, and even versus abroad, I mean, it's significantly lower. So when you talk about an industry which has low penetration and growing higher, and 8 to 10% industry growth seems to be much on the lower or conservative side, given that even, all the pharma companies tend to grow at 10%, you see the diagnostic chains are growing at 10%. So I'm just trying to understand, is there something that you have seen which you think will delay the diagnostic adoption, or what has changed in terms of your perception about the industry growth?
No, 8 to 10%, basically we keep on saying on the internet, what is the growth rate for this industry. So I don't have exact numbers because there is no statistical platform where these numbers are available. I am growing at 15 to 20 or rather 20%, and the industry should be growing definitely lower to me because I am growing at a faster rate. So from a statistical perspective, you can definitely say that the industry is not growing at 15 to 20% because I am trying to enter into new customers. I'm trying to launch new assays. So it has to be lower than 20, definitely. And the number of 8 to 10% is what has been reported in multiple platforms on the net. That's how we have got this number. The industry is not growing higher than 20. Otherwise, it is a shame on us that we are growing slower than the industry.
Understood. So your growth of domestic will continue at 20%. Is that understanding?
We are trying to give a figure of 15 to 20 so that, it is little more conservative. On the export world, we are saying 20 to 25. So
15 to 20 is for domestic?
Yes.
Okay. And export is higher. Okay, understood. And secondly, when you talk about the competition getting a bit higher, is that happening from the MNC side, or are we seeing more domestic players entering our space? So where is the competition becoming higher from?
So now more domestic players have, after the COVID, a lot of domestic players have come. They are all small, but then they keep on traveling in the pocketed regional areas, So that is where the competition is now increased in terms. The international players don't reduce the prices. It is the domestic players which create a pricing competition more. And of course, our quality is better, our tech support is better. So people want a quality product. But sometimes in the small government tenders and other, these small players, regional players, they try to create nuisance.
Thank you, sir. Mr. Singhal, may we request that you return to the question queue for follow-up questions, please. Thank you. Our next question comes from Hardik Bora with Viraya Capital. Please go ahead.
Hi. Thank you for the opportunity. So this was a question on Chorus. From the balance sheet side, we've spoken about the P&L already, but what is the balance sheet like? Is there debt? And would we be requiring any other cash support that we need to give either on the capacity or on the working capital to Chorus over the next few years? Can you just talk about that?
Yeah. No, so there is no debt. The debt is, it's somewhere around 4 to 5 crores, which is periodically to be repaid over next 2 years or so. And they have a cash balance which is enough to sustain them for 2 years. And because they will be starting to make profits, so it will not be needed. So the debt is not there. It is very high. It is just 400K odd euros. So it's almost 4 crores or something. And they have a cash position which is almost 1.2 or 1.5 million. So they won't need any cash infusion from us for next 1 or 2 years, and hopefully by 1 or 2 years they would be generating cash.
Yes. No, thank you. Thank you for that. And just one question was on some of the competing other technologies we are reading about, micro fluids, point of care testing in molecular diagnostics. Also, other names keep coming up like isothermal based amplification. These are very nascent, but in case, first of all, are these forms of testing some threat to us? And if so, how difficult is it for us to, move into some of these areas is required? You're already into NGS, they're working on NGS, but trying to understand on these areas as well.
So when you talk about microfluidic POC, so that is already there, and microfluidic POC is normally used for 1 sample or 4 samples. So that is to be dedicated to a hospital because they can process only 1 or 4 samples. That is one thing we would want to develop, and it is there in our R&D program. But it is not a threat because our sales is mainly into high volume labs who do more samples at a time, and even hospitals who do more samples. So this POC is mainly for hospitals, and we have to develop it. We are on it. It's not an immediate threat, but maybe after it's there dominating in Europe or in US. With India, it's not there right now. Isothermal is actually, it was very much hyped during COVID times. It has an easier sort of easier workflow that you can put it into a machine which is working at the same temperature and you get a result. But it cannot do high number of tests at one time, like high target, like respiratory panel, you're talking about 32 samples. 32 targets, bacterial or viral targets. So you cannot do 32 targets on the isothermal amplification. Again, similarly, you want to process 30 samples, 50 samples on a PCR which is 96 well. If you want to do more, you have 386 well PCR. Isothermal machines are not so big right now. They are normal PCRs which are either 12, 16 or 15. So isothermal is not a threat at all.
Understood. So they're even more niche. Okay. Sorry, one question. Vivid Global Tech was highlighted as a related party transaction in our previous annual reports, but we didn't see that mention in financial year 24 annual report. So any reason why it doesn't show up? You have submitted BSc filings.
If you see the presentation in November, this question was raised. So we clarified that we were doing it out of abundant precaution. Pratik Goyal, who is the proprietor of Vivid Global Technology, he left his multinational job and joined us in 2013 with the condition that he would be exclusive channel partner for India. Because he knew this industry, so he was appointed as the exclusive channel partner. And then he had an intent that I want to have some shares also in the company. So he was given 5% share in a preferential issue, which we also took. So because he is not related to us, he does not qualify in the definition of a related party and as per the Companies Act, which was explained in the presentation in November also. Previously, it was being done out of abundant precaution. But later on, when the amalgamation has happened, it was not needed because it did not qualify as a clear definition. He is not related to us. He is not a part of the directors. He is just a distributor who is exclusive distributor. Rather, he worked since 2013, when he left his cushy job with a multinational company. So he has a lot of contribution. So that is the reason why it is not mentioned now.
Thank you. Thank you. Mr. Bora, may we request that you return to the question queue for follow-up questions, as there are several participants waiting for their turn. Ladies and gentlemen, may we request you to limit to one or two questions per participant. Should you have a follow-up question, we would request you to rejoin the queue. Our next question comes from Asta from PKD Advisors. Please go ahead.
Hello. Thank you, sir, for giving me this opportunity. So I wanted to know what's your go-to-market strategy and right to win in India? I mean, we are seeing a lot of competition from small domestic players. So I wanted to understand.
No, I already explained in the initial call, that we approach the lab head, who is scientific head. We explain the test that we are offering. We explain the uniqueness. Then it is valid. The validation is performed. Once the validation is found to be good, then the kits are started for selling. And it is the quality, the validation results, the scientific background, the history of the company, which is the main reason why we are able to sell more or faster.
So, sir, I mean, Mole Bio as well as MyLab, they are also growing pretty fast. So, don't we compete with them when we are going to the lab partners and everyone? How are we winning against them? Because we are in the same product line, right?
No, so that you should approach the lab and understand, that why they choose our product again over somebody else's product. So that's why I told you, that we are trying to give better quality product, better tech support, better logistics. We are trying to give better prices. So these are the market dynamics.
Thank you. Ms. Asta, may we request you to rejoin the question queue. Thank you. Our next question comes from Prajesh Maru with Money Curves Analytics. Please go ahead.
Yeah, thank you, Dubhaji, and thank you for arranging this call also after it really helps. My question was for the Chorus Bioscience, that what is the status of IVDR compliance of their product, and do you see this as an additional cost which you will have to bear in future? And my second question, and I will not have any follow-up question after that. My second question is that there is a contradiction on the Indian business and European business. We say that employee cost is our advantage because we work with low employee cost, while the new acquisition which you have done, it has got high employee cost. So how do you see this contradiction, sir? And whether I'm sure you must have thought through it, but if you can just explain and clarify this. Thank you.
So the first part is the IVDR. So IVDR law says that Class C devices, which is Chorus and also ours, if we have signed an agreement with the notified body, which is the ISO certifying body, by May 25, we can continue to sell Class C products till December 28. After December 28, if the product is IVDR compliant, then only it can be sold. So Chorus has got probably 8 to 10 products, out of which AMR, which is their main product, contributing almost 60 to 70% revenue, that they are going to take forward for IVDR. And there would be a cost which would be somewhere around 50,000 euros, because they have got a lot of data and all, 50,000, 70,000 euros, which they have to incur to get the IVDR certification for this. So which is already incorporated in their cost structure. And the second question is that manpower cost. So we are producing in India. We have low manpower cost. Chorus is acquired with an intent to be able to cross-sell products PCR to them, which would be basically not manufactured there. We would be doing most of the packed manufacture under OEM to them. So there would be a margin which would be available to them for PCR products. For their own products, their manpower cost is high, out of which R&D cost is major. So we hope that this R&D pipeline can actually add to their top line, and after 2 to 3 years, when they are doing 7 to 8 billion sales, they have an EBITDA of 10 to 15%, and the manpower cost is reduced below, say, somewhere around 25 or order. So they have a different profitability working with a higher manpower cost because the salaries there, minimum wages is much higher, and we have a different manufacturing cost, which is lower minimum wages, lower Indian wage. And of course, our sales have also increased compared to the level of the manpower usage.
Thank you.
Thank you.
Thank you. Ladies and gentlemen, that was the last question for the day. I now hand the conference over to the management for closing comments.
I thank you all the investors for joining this call and taking your time, precious time, and it was wonderful to interact with you. And we'll surely see that we have more earning calls in quarters coming. Thank you all.
Thank you. On behalf of Nuvama Wealth, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.